to know what part of the spectrum they sit on the sustainability spectrum. So are they, and I mean financially sustainability, which end are they? Are they on the donor side, grant side, subsidy side, or right the other end on the commercial side, or are they a combination of the two? We are social and commercial. You as a project manager or a project holder or entrepreneur or single person entrepreneur need to understand whether you're looking for debt finance or equity finance. They are very, very different things. The equity funder typically wants a return. He wants to get involved with the corporate. He wants to direct the corporate through different layers, depending how obviously how big the corporate is. But he's going to get very involved in that corporate. The debt fund, and typically there's a higher risk and a higher return expectation. The debt fund, on the other hand, remember, his return is only the interest. And then 100% downside risk unless he's got securities. So just think about what he wants from you. He's going to want all the securities, he's going to tie you up, he's going to want huge amounts of corporate governance in the organisation.
The funding side is very difficult. And we had 2 or 3 routes to that, and we really ended up with a focus on what we call the impact investors. And there's an increasing amount of impact investors around the world. These are typically immensely wealthy families or structures that want to invest not only to make money, but also to do good. So it's not just going and buying 5 more shares in BHP or whatever it is, it's actually investing in businesses that make a difference. And we ended up securing $8 million from 4 different funds of those impact investors.
Financing, always an issue. You know, we're on the foreground of social businesses just starting up in South Africa. So there's no formal ground for us to really stand on. Most companies look at you and say, like, you're either an NGO or you're for profit. What is this in-between stuff?
It could sideline smaller businesses that don't necessarily have the capital to get all these accreditations and everything. And that's why I think the great thing about the WWF is it's a great mark and a vote of confidence that we've received there. So that's been fantastic for us.
It's much better for everybody, you know, for government and for the consumers and for the manufacturers. If there are no subsidies, if it's just an open market, but then we mustn't subsidize anything, right? We mustn't subsidize the coal guys and we mustn't subsidize the nuclear guys. Then we don't have to subsidize the renewable guys either, right? So just make it open and then just let everybody play and let the market take over.
One of these challenges is to achieve a qualitative change in the strategy and investment decisions of major companies in order to reflect 2 growing commercial realities. First of all, long-term strategies predicated on continuing to produce carbon-intensive products and failure to mitigate carbon-intensive production processes will increasingly come under strain due to a range of factors ranging from high electricity prices to possible border adjustment taxes in global trade, as well as increasing consumer demand for greener products. So there's clearly a need for corporates to grasp the opportunities afforded by increasing demand for greener products and production techniques. But this requires longer-term vision and investment horizons from both the management of these companies and, most importantly, from their shareholders.
What's happening in funding on the world stage at the moment? I mean, I think you all know it. You know, when you run out of family and friends, donor funding, what has come up recently, recent innovation, the last 4 or 5 years, is crowdfunding. It has not been big in South Africa, but it's really on consumer innovation and technology innovation. You're going to struggle to get proper crowdfunding and anything else out there. So people actually are really funding the gadget up front, or the new innovation up front. That's really what's happening there.
We have this index which is called the Global Cleantech Innovation Index, which we have developed with the Cleantech Group, which is looking at all G20 countries and another 18 countries, and South Africa is in there. Looking at the eastern side, we have the big commercializers. The strong commercializers in the cleantech sector are China and India. So they're very, very good at commercializing cleantech. What we're seeing the last couple of years, because of the decline in the US and in Northern Europe in the venture capital, we're seeing a big surge of Chinese venture capital into European and American cleantech So we've seen a 6-fold increase in Chinese venture capital very recently going into clean tech in these economies that are very good at startup generating. South Africa has a very strong entrepreneurial culture, and that's something that South Africa can certainly build on. And also quite a lot of mergers and acquisitions, so big companies investing in clean tech in South Africa.